Hello and welcome to a discussion on the cash from operations. In this session we'll have a focus on the payment to the creditors, and the payment to the creditors can be found by seeing the opening and the closing creditors, payment to the creditors, discounts and the credit purchases. So opening creditors plus purchases less payments less discount is a closing creditor. So if all other information is given, then the payment to the creditor is equal to opening creditors plus credit purchases minus discount minus closing creditor. Maybe sometime to find credit purchases we have to look into the stock details, but for the time being we are not taking the stock into account. We are assuming that whatever purchases are there are fully sold, or whatever goods purchased has been paid during the period. So let us take the example once again. This is a simple cash flow related information. As usual, let us find the profit. So sales is 80,000 less the COGS. The entire stock purchase is sold, so entire stock purchase will become COGS. Expenses is 12,500. Then you have in this case there is an income in the form of discount. So discount is income. Okay, so discount is an income. The COGS is expense, and also the other expenses paid. So the profit for the period is 80,000 plus 300 minus 30,000 minus 12,000, so 37,800 is a profit for the period. We need the profit for the period to determine the CFO indirectly by using an indirect method. So now let us see the indirect method. The CFO is not same as profit because of non-cash, non-operating and the credit transaction. Here we are only concentrating on one of the items, that is the credit transaction, and that too on the changes in the creditor. And the creditors have increased. So creditors have increased means you have purchased the goods on credit. So part of the goods which you have shown as an expense here, it's possible that you have not paid money for it. So therefore it is added back. Since no other adjustments are there, we are finding CFO as profit, add increase in the creditor. But to find actually how much cash has been paid, we need that information. To find CFO by using the direct method, we need payment information. So payment information is a opening debtor creditor. Opening creditor is 8,000 given. The closing creditor 12,000 given. We are assuming the entire purchases is for credit, and we don't know the payment, and there is a discount which the creditors have given 300. So the payments will be 8,000 plus 30,000 minus 300 minus closing, so 25,400 is a payment. Now if the entire sales is for cash and the payment to the creditor is given, and the expenses for the period we paid fully, so therefore the cash flow from operation. So this 4,200 increase in the creditor which we got as the difference between the opening and closing reflects the net result of the transactions affecting the creditor. Just like the debtor, the opening and closing debtor difference is an increase in the debtor, which reflects the changes in the debtors, which is actually the collections, the sales, bad debts and discount. So in an indirect method of calculating, we don't get into the details of the payments and the purchases and the payments or discount received, but we try to capture that by seeing the opening and closing data. So the difference between the opening and closing creditor in this case, in the previous case, the difference between the opening and closing data is captures the transactions affecting the creditors in this case, and in the previous case the debtors. So therefore an indirect method only shows or only takes into account the change in the creditor, and the change in the creditor is a purchases, less payments and less discount. Thank you very much.